who want to take up agroforestry. Honorable Speaker, I now move to the fourth priority, financing of investments. Capital investment holds the key to speedy and sustainable economic revival and consolidation through its multiplier effect. Capital investment also helps in creating employment opportunities, induced enhanced demand for manufactured input from large industries and MSMEs, services from professionals, and help farmers through better agri-infrastructure. The economy has shown strong resilience to come out of the effects of the pandemic with high growth. However, we need to sustain that level to make up for the setback of 2020-2021. As outlined in para 5 earlier, the virtuous cycle of investment requires public investment to crowd in private investment. At this stage, private investments seem to require that support to rise to their potential and to the needs of the economy. Public investment must continue to take the lead and pump prime the private investment and demand in 2022-23. Considering the above imperative, the outlay for capital expenditure in the union budget is once again being stepped up sharply by 35.4% from 5.54 lakh crore in the current year to 7.50 lakh crores in 22-23. This has increased to more than 2.2 times the expenditure of 2019-20. This outlay in 22-23 will be 2.9% of the GDP. Effective capital expenditure. With this investment taken together with the provision made for creation of capital assets through grants and aid to states, the effective capital expenditure of the central government is estimated at 10.68 lakh crores in 22-23, which will be about 4.1% of the GDP. Green bonds. As a part of the government's overall market borrowings in 22-23, sovereign green bonds will be issued for mobilizing resources for green infrastructure. The proceeds will be deployed in public sector projects which help in reducing the carbon intensity of the economy. GIFT IFSC. World-class foreign universities and institutions will be allowed in the GIFT city to offer courses in the financial management, fintech, science, technology, engineering, and mathematics free from domestic regulations, except those by the IFSCA to facilitate availability of high-end human resources for financial services and technology. An international arbitration center will be set up in the GIFT city for timely settlement of disputes under international jurisprudence. Services for global capital for sustainable and climate finance in the country will be facilitated in the GIFT city. Infrastructure status. Data centers and energy storage systems, including dense charging infrastructure and grid-scale battery systems, will be included in the harmonized list of infrastructure. This will facilitate credit availability for digital infrastructure and clean energy storage. Venture capital and private equity invested more than 5.5 lakh crores last year, facilitating one of the largest startup growth system. Scaling up this investment requires a holistic examination of regulatory and other frictions. An expert committee will be set up to examine and suggest appropriate measures. Government-backed funds, NIIF and SIDBI, Fund of Funds, have provided scale capital, creating a multiplier effect. For encouraging important sunrise sectors such as climate action, deep tech, digital economy, pharma, and agri-tech, the government will promote these thematic funds for blended finance, with the government share being limited to 20% and the funds being managed by private fund managers. For financing the infrastructure needs, the stepping up of public investment will need to be complemented by private capital at a significant scale. Measures will be taken to enhance financial viability of projects, including PPP, with technical and knowledge assistance from multilateral agencies. Enhancing financial viability shall also be obtained by adopting global best practices, innovative ways of financing, and balanced risk allocation. Digital rupee. Introduction of a central bank digital currency will give a big boost to digital economy. Digital currency will also lead to a more efficient and cheaper currency management system. It is therefore proposed to introduce digital rupee using blockchain and other technologies to be issued by the Reserve Bank of India starting 2022 and 23. Financial assistance to states for capital investment. Reflecting the true spirit of cooperative federalism, the central government is committed to bolstering the hands of the states in enhancing their capital investment towards creating productive assets and generating remunerative employment. The scheme for financial assistance to states for capital investment has been extremely well received by the states. In deference to the requests received during my meeting with the chief ministers and state finance ministers, the outlay for this scheme is being enhanced from 10,000 crores in the budget estimates to 15,000 crores in the revised estimates for the current year. For 22-23, I'll repeat that sentence for the benefit of many of our honorable members. In deference to the requests received during my meeting with chief ministers and state finance ministers, the outlay for this scheme is being enhanced from 10,000 crores in the BE to 15,000 crores, 15,000 crores in the RE of the current year. For 22-23, the allocation is 1 lakh crore to assist the states in catalyzing the overall investments in the economy. These 50-year interest-free loans are over and above the normal borrowings allowed to the states, This allocation will be used for PM Gati Shakti related and other productive capital investments of the states. It will also include components for supplemental funding for priority segments of PM Gram Sadak Yojana, including support for the state share, digitization of the economy, including digital payments and completion of OFC network, and reforms related to building bylaws, town planning schemes, transit-oriented development, and transferable development rights. In 22-23, in accordance with the recommendations of the 15th Finance Commission, the states will be allowed a fiscal deficit of 4% of the GSDP, of which 0.5% will be tied to power sector reforms, for which the conditions have already been communicated in 21-22. Fiscal management. As against a total expenditure of 34.83 lakh crores of rupees projected in the BE 21-22, the revised estimate is 37.70 lakh crores. The revised estimate of capital expenditure is 6.3 lakh crores of rupees. This includes an amount of 51,971 crores towards settlement of outstanding guaranteed liabilities of Air India and its other sundry commitments. Coming to the budget estimates, Honorable Speaker, sir, the total expenditure in 22-23 is estimated at 39.45 lakh crores, while the total receipts other than borrowings are estimated at 22.84 lakh crores of rupees. The revised fiscal deficit, Honorable Speaker, in the current year is estimated at 6.9% of the GDP, as against 6.8% projected in the budget estimates. The fiscal deficit is in 22-23 is estimated at 6.4% of the GDP, which is consistent with the broad path of the fiscal consolidation announced by me last year to reach a fiscal deficit level below 4.5% by 25-26. While setting the fiscal deficit level in 22-23, I am conscious of the need to nurture growth through public investment to become stronger and sustainable. I will now move to part B of my speech. Direct tax. Honorable Speaker, sir, I take this opportunity to thank all the taxpayers of our country who have contributed immensely and strengthened the hands of the government in helping their fellow citizens in this hour of need. So I have brought in a little verse from the Mahabharata. I won't spend more time reading because I would like the speech to get enough time. However, the substance of it is the king must make arrangements for yoga kshema, which is the welfare of the populace, by way of abandoning any laxity and by governing the state in line with dharma, along with collecting taxes which are in consonance with dharma. This is Mahabharata Shanti Parva Adhyaya, Shloka 11 from 72. Drawing wisdom from our ancient texts, we continue on the path to progress. The proposals in this budget, while continuing with our declared policy of stable and predictable tax regime, intend to bring more reforms that will take ahead our vision to establish a trustworthy tax regime. This will further simplify the tax system, promote voluntary compliance by taxpayers, and reduce litigation. Introducing new updated return. India is growing at an accelerated pace and people are undertaking multiple financial transactions. The Income Tax Department has established a robust framework of reporting of taxpayers' transactions. In this context, some taxpayers may realize that they have committed omissions or mistakes in correctly estimating their income for tax payment. To provide an opportunity to correct such errors, I am proposing a new provision permitting taxpayers to file an updated return on payment of additional tax. This updated return can be filed within 2 years from the end of the relevant assessment year. Honorable Speaker, sir, presently, if the department finds out that some income has been missed out by an assessee, it goes through a lengthy process of adjudication. Instead, with this proposal now, there will be a trust repost in the taxpayers that will enable the assessee herself to declare the income that she may have missed out earlier while filing her return. Full details of the proposal are given in the finance bill. It is an affirmative step in the direction of voluntary compliance. Reduced alternative minimum tax rate and surcharge for co-operatives. Currently, cooperative societies are required to pay alternate minimum tax at the rate of 18 and 1.5%. However, companies pay the same rate, the same, which is the alternate minimum tax, at the rate of 15%. To provide a level playing field between cooperative societies and companies, I propose to reduce this rate for the cooperative societies also to 15%. Honorable Speaker, sir, I also propose to reduce the surcharge on cooperative societies from the present 12% to 7% for those having total income of more than 1 crore and up to 10 crores. This would help in enhancing income of cooperative societies and its members who are mostly from the rural and from farming communities. Tax relief to persons with disability. The parent or guardian of a differently abled person can take an insurance scheme for such person. The present law provides for deduction to the parent or guardian only if the lump sum payment or annuity is available to the differently abled person on the death of the subscriber, that is the parent or the guardian. There could be situations where the differently abled dependent may need payment of annuity or lump sum amount even during the lifetime of their parent or guardian. I propose thus to allow the payment of annuity and lump sum amount to the differently abled dependent during the lifetime of the parent and guardians, that is parent or guardians, attaining the age of 60 years. Parity between employees of the state and central governments. At present, the central government contributes 14% of the salary of its employee to the National Pension System, NPS, Tier 1. This is allowed as a deduction in computing the income of the employee. However, such deduction is allowed only to the extent of 10% of the salary in case of employees of the state governments. To provide equal treatment to both central and state government employees, I propose to increase the tax deduction limit from 10% to 14% on employers' contribution to the MPS account of state government employees as well. This would help in enhancing the social security benefits of the state government employees and bring them at par with central government employees. Incentives for startups. Startups have emerged as drivers of growth for our economy. Over the past few years, the country has seen a manifold increase in successful startups. Eligible startups established before 31/3/2022 had been provided a tax incentive for 3 consecutive years out of the 10 years from incorporation. In view of the COVID pandemic, I propose to extend the period of incorporation of the eligible startup by 1 more year, that is up to 31/3/2023, for providing such tax incentives. incentives for newly incorporated manufacturing entities under concessional tax regime. In an effort to establish a global competitive business environment for certain domestic companies, a concessional tax regime of 15% was introduced by our government for newly incorporated domestic manufacturing companies. I propose to extend the last date for commencement of manufacturing or production under Section 115B AB by one more year, that is from 31st March 2023 to 31st March 2024. Scheme for taxation of virtual digital assets. There has been a phenomenal increase in transaction in virtual digital assets. The magnitude and frequency of these transactions have made it imperative to provide for a specific tax regime. Accordingly, for the taxation of virtual digital assets, I propose to provide that any income from transfer of any virtual digital asset shall be taxed at the rate of 30%, 30%. No deduction in respect of any expenditure or allowance shall be allowed while computing such income except cost of acquisition. Further, loss from transfer of virtual digital asset cannot be set off against any other income. Further, in order to capture the transaction details, I also propose to provide for TDS on payment made in relation to transfer of virtual digital asset at the rate of 1% of such consideration above a monetary threshold. Gift of virtual digital asset is also proposed to be taxed in the hands of the recipient. Litigation management to avoid repetitive appeals by the department. It has been observed that a lot of time and resources are consumed in filing of appeals which involve identical issues. Taking forward our policy of sound litigation management, I propose to provide that if a question of law in the case of an assessee is identical to a question of law which is pending in the appeal before a jurisdictional high court or Supreme Court, in any case, the filing of further appeal in the case of this assessee by the department shall be deferred till such a question of law is decided by the jurisdictional high court or the Supreme Court. This will greatly help in reducing the repeated litigation between taxpayer and the department. Taking forward our efforts to further promote the IFSC, I hereby propose to provide that income of a non-resident from offshore derivative instruments or over-the-counter derivatives issued by an offshore banking unit, income from royalty and interest on account of lease of ship, and income received from portfolio management services in IFSC shall be exempt from tax subject to specified conditions. Rationalization of surcharge. In the globalized business world, there are several work contracts whose terms and conditions mandatorily require formation of a consortium. The members in the consortium are generally companies. In such cases, the income of these AOPs has to suffer a graded surcharge up to 37%, which is a lot more than surcharge on the individual companies. Accordingly, I propose to cap the surcharge of these AOPs at 15%, 15%. Further, the long-term capital gains on listed equity shares, units, etc. are liable to maximum surcharge of 15%, while other long-term capital gains are subjected to a graded surcharge which goes up to 37%. I propose to cap the surcharge on long-term capital gains arising on transfer of any type of assets at 15%. This step will give a boost to startup community and along with my proposal on the extended tax benefits to manufacturing companies and startups reaffirms our commitment to Atmanirbhar Bharat. Clarification in relation to health and education cess as business expenditure. The income tax is not an allowable expenditure for computation of business income. This includes tax as well as surcharges. The health and education cess is imposed as an additional surcharge on the taxpayer for funding specific government welfare programs. However, some courts have allowed health and education cess as business expenditure, which is against the legislative intent. To reiterate the legislative intent, I propose to clarify that any surcharge or cess on income and profits is not allowable as business expenditure. Deterrence against tax evasion. Honorable Speaker, sir, presently there is ambiguity regarding set-off of brought forward loss against undisclosed income detected in search operations. It has been observed that in many cases where undisclosed income or suppression of sales, etc., is detected, payment of tax is avoided by setting off of losses. In order to bring certainty and to increase deterrence among tax evaders, I propose to provide that no set-off of any loss shall be allowed against undisclosed income detected during search and survey operations. It has been noticed that as a business promotion strategy, there is a tendency on businesses to pass on benefits to their agents. Such benefits are taxable in the hands of the agents. In order to track such transactions, I propose to provide for tax deduction by the person giving benefits if the aggregate value of such benefits exceeds 20,000 rupees during the financial year. A few other changes are being made, the details of which are there in the finance bill. Indirect taxes. So remarkable progress in GST. GST has been a landmark reform of independent India, showcasing the spirit of cooperative federalism. While aspirations were high, there were huge challenges too. These challenges were overcome deftly and painstakingly under the guidance and the oversight of the GST Council. We can now take pride in a fully IT-driven and progressive GST regime that has fulfilled the cherished dream of India as one market, one tax. There are still some challenges remaining, and we aspire to meet them in the coming year. The right balance between facilitation and enforcement has engendered significantly better compliance, and enforcement has engendered better compliance. GST revenues are buoyant despite the pandemic. I would bring in something which I've got to know this morning, not part of my speech, but worth putting in here for the knowledge of the Honorable House. I would like to bring to the notice of this House that the gross GST collections for the month of January 22 are rupees 1,40,986 crores, which is the highest since the inception of GST. This has been possible due to rapid economic growth recovery post-COVID. This has been possible due to the rapid economic recovery post-COVID, as well as various policy and administration undertaken by central and state tax administrations. Taxpayers deserve applause for this growth. Not only did they adapt to the changes, but enthusiastically contributed to the cost of paying taxes. Special economic zones. In part A of my speech, I have referred to the proposed reforms in SEZs. Alongside, we will also undertake reforms in customs administration of SEZs, and it shall henceforth be fully IT-driven and function on the customs national portal with a focus on higher facilitation and with only risk-based checks. This will ease doing business by SEZ units considerably. This reform shall be implemented by 30th September 2022. Customs reforms and duty rate changes. Customs administration has reinvented itself over the years through liberalized procedures and infusion of technology. Faceless customs has been fully established. During COVID-19 pandemic, customs formation have done exceptional frontline work against all odds, displaying agility and purpose. Customs reforms have played a very vital role in domestic capacity creation, providing level playing field to our MSMEs, easing the raw material supply side constraints, enhancing ease of doing business, and being an enabler to other policy initiatives such as PLI and phased manufacturing plans. My proposal on customs side are aligned to these objectives. Project imports and capital goods. National Capital Goods Policy 2016 aims at doubling the production of capital goods by 2025. This would create an employment opportunities and result in increased economic activity. However, several duty exemptions, even extending to over 3 decades, in some cases have been granted to capital goods for various sectors like power, fertilizer, textiles, leather footwear, food processing, and fertilizers. These exemptions have hindered the growth of the domestic capital goods sector. Similarly, project import duty concessions have also deprived the local producers of a level playing field in areas like coal mining projects, power generation, transmission, or distribution projects, railway and metro projects. Our experience suggests that reasonable tariffs are conducive to the growth of domestic industry and make in India without significantly impacting the cost of essential imports. Accordingly, Honorable Speaker, sir, it is proposed to phase out the concessional rates in capital goods and project imports gradually and apply a moderate tariff of 7.5%. Certain exemptions for advanced machineries that are not manufactured within the country shall continue. A few exemptions are being introduced on inputs like specialized castings, ball screw, and linear motion guide to encourage domestic manufacturing of capital goods. In the last 2 budgets, we have rationalized several customs exemptions. We have once again carried out an extensive consultation, including by crowdsourcing. As a result of these consultations, more than 350 exemption entries are proposed to be gradually phased out. These include exemptions on certain agricultural produce, chemicals, fabrics, medical devices and drugs, and medicines for which sufficient domestic capacity exists. Further, as a simplification measure, several concessional rates are being incorporated in the customs tariff schedule itself instead of prescribing them through various notifications. This comprehensive review will simplify the customs rate and tariff structure, particularly for sectors like chemicals, textiles, and metals, and minimize disputes. Removal of exemption on items which are or can be manufactured in India and providing concessional duties on raw material that go into manufacturing of intermediate products will go many a step forward in achieving our objective of Make in India and Atmanirbhar Bharat. I shall now take up specific sector-specific proposals. Electronics. Electronic manufacturing has been growing rapidly. Customs duty rates are being calibrated to provide a graded rate structure to facilitate domestic manufacturing of wearable devices, hearable devices, and electronic smart meters. Duty concessions are being given to parts of transformer of mobile phone chargers and camera lens of mobile camera module and certain other such items. This will enable domestic manufacturing of high growth electronic items. Gems and jewelry. To give a boost to the gems and jewelry sector, customs duty on cut and polished diamonds and gemstones is being reduced to 5%. Simply sawn diamond would attract nil customs duty. To facilitate export of jewelry through e-commerce, a simplified regulatory framework shall be implemented by June this year to disincentivize import of undervalued imitation jewelry. The customs duty on imitation jewelry is being prescribed in a manner that a duty of at least 400 rupees per kg is paid on its import. Chemicals. Customs duty on certain critical chemicals, namely methanol, acetic acid, and heavy feedstocks for petroleum refining are being reduced, while duty is being raised on sodium cyanide, for which adequate capacity in the domestic arena exists. These changes will help in enhancing domestic value addition. MSMEs. Duty on umbrellas is being raised to 20%. Exemption to parts of umbrellas is being withdrawn. Exemption is also being rationalized on implements and tools for agricultural sector which are manufactured in India. Customs duty exemption given to steel scrap last year is being extended for another year to provide relief to MSME secondary steel producers. Certain anti-dumping and CVD on stainless steel and coated steel flat products, bars of alloy steel and high-speed steel are being revoked in larger public interest considering prevailing high prices of metals. To incentivize exports, exemptions are being provided on items such as embellishment, trimmings, fasteners, buttons, zipper, lining material, specified leather, furniture fittings, and packaging boxes that may be needed by bona fide exporters of handicrafts, textiles, leather garments, leather footwear, and other goods. Honorable Speaker, sir, duty is being reduced on certain inputs required for shrimp aquaculture so as to promote its exports. Tariff measure to encourage blending of fuel. Blending of fuel is a priority for this government. To encourage the efforts for blending of fuel, unblended fuel shall attract an additional differential excise duty of rupees 2 per litre from first day of October 22. A few other changes are being made in duty rates, customs, tariff, and customs law, the details of which are there in the finance bill. Mr. Speaker, sir, with these words, I commend the budget to this august House. Thank you.
Item number 2, Srimati Nirmala Sitharaman ji.
Sir, with your permission, I rise to lay on the table the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management FRBM Act 2003. Medium-term fiscal policy cum fiscal policy strategy statement and macroeconomic framework statement.
Item number 3, Vitt Vidhek 2020, Nirmala Sitharaman ji.
Sir, item number 3, Finance Bill. Sir, with your permission, I rise to move for leave to introduce the Finance Bill 2022.
प्रश्न है कि वित्त विधेयक को प्रस्तावित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध में ना कहें, मेरे विचार में निर्णय हाँ वालों के पक्ष में, हाँ वालों के पक्ष में। माननीय मंत्री जी वित्त विधेयक को पुरस्तापित करें।
Sir, I introduce the bill.
सभा की कार्रवाई कल बुधवार दिनांक 2 फरवरी 2022 को 4:30 बजे तक के लिए स्थगित की जाती है।
That was Finance Minister Nirmala Sitharaman presenting the Union budget for the year 2022-23, and several provisions have been made to encourage growth in the economy, whether it is